Good morning. Thanks for tuning into the trade setup. I'm Neeraj Shah. Put a bit of a risk off now start to come in play after a 1500-point rally in about 30 days. Well, remains to be seen on the Nifty, that is, I'm talking about. Let's first take stock of the global news flow. And this might well be one of the, how do I say, catalysts for a bit of a quietening down or a pullback, if you will. US House Speaker Nancy Pelosi is expected to visit Taiwan on Tuesday. Pelosi would become the first sitting speaker to visit Taiwan in 25 years. And the meeting between Pelosi and Taiwan president could happen on Wednesday. This would irk China till no end. This raises the specter for for talks around, or a belief around some bit of further stress between US and China, and that may well impact the bit of a risk on move that we have currently. So let's wait and watch. I think today and tomorrow this remains the key monitorable. Mind you, it was widely believed that maybe, all through this while, the belief was that maybe the trip may not happen, even the US as a rhetoric. China has already committed itself to doing something if Nancy Pelosi were to visit. Now that she is visiting, uh, let's see whether this is only saber rattling or something else. The Indian news flow is okay. The India GST collections for July were the second highest ever at 1.49 lakh crores, up about 28%. Stunning show really out there. And when this conversation about whether we will hit a recession or not, well, FM Nirmala Sitharaman says India is not at a risk of getting into stagflation or recession. And the FM says the government is making efforts to lower retail inflation from the current 7% as well. I would reckon that a large portion of what happens on that count is at the mercy of what happens to crude. And I think crude is at the mercy of what the European winter brings. All the European nations are trying to ensure that their gas supplies, if not crude supplies at least, get sorted in some fashion before winter comes. But I think what happens to crude oil prices would effectively be the determinant of what happens to India, recession, stagflation, or nothing. US markets pulled back from the highs of trade yesterday. So while they look flattish, but up about 1.1%, and from there they ended marginally in the red. The futures are in the red as we speak. So that is one thing. The other key determinant is what's happening to yields, isn't it? Now the US 10-year yield is down at 2.87% to 2.52. That is quite something from a high of around 3.3. Clearly shows that this or the yield and maybe inflationary pressures are no longer the bigger worry. Maybe the global slowdown is the bigger worry. Dollar index at 105 has cooled off a little bit from those levels as well. And Bitcoin, in line with other risk assets, came off a little bit in trade yesterday as well. The SGX Nifty should be showing a flattish shine or two marginally downside. I'm pretty sure. I mean, you don't need me to tell you that they will not be showing some upsides. For now, about 83 odd points, so about 0.5%, par for the course, you would believe. So the trade setup, I think the Taiwan tension, the global slowdown worries peg back Asian equities today. The Nifty is currently above the 200-day moving average, but the Nifty PCR, so yesterday's move took Nifty past the 200-day moving average. For a further leg up, it needs to stay above that. Let's see if it does. But the point is the Nifty put call ratio is now at about 1.48, which is very close to overbought territory typically. I think bunch of quant indicators already say that we are in a high greed zone, and therefore the chances of a pullback are higher. Could that happen? Well, I think some technical indicators indicate that yes, there might be the case. I think from what I spoke to dealing rooms for within sectors, what to watch out for, two or three mentioned that the rally in the metal stocks has been so strong that they may face some resistance in the next few days. To my mind, though, so metals, they may do what they do. This is what the dealing rooms are saying, of course. But when I look at what's happened to the numbers and the reactions thereof, viewers, I've been sounding like a broken record as I was on real estate a few months back. But consumer stocks are ruling the roost and are clear winners of Q1 numbers thus far. And therefore, that's the space that everybody should focus on for sure. Look at the numbers, look at the commentary. That is probably one pocket in addition to financials wherein the numbers delivery is rock solid. Frankly, two pockets which have kind of held fort in a quarter which has been marred by more downgrades than upgrades, consumers and banks in particular. Flows FIs bought about 2320 crores in trade yesterday. DIs sold about 822 crores. So today's on a trot now, some buying there. Today's a decent day for numbers. Adani Green Godrej Properties, Deepak Nitrite, that's interesting. Brigade Enterprises, Bosch, Voltas, and Lemon Tree Hotels from amongst the hotel space should be interesting one to watch out for as well. So I think these are a few numbers that need to be watched out for. A bunch of conversations around what has happened on China Plus One and which industries have moved to India. There's a viewer query today. I think from what you hear companies say, and it's too early days maybe, but you hear multiple companies, one in specialty chemicals, to an extent in textiles and pharma as well. Talking selectively, very selectively, by the way. Laurus Labs has said that they haven't seen any evidence of that, but a couple of other pharma companies have said that there are some conversations happening around manufacturing tie-ups being moved from Europe to India. So that could be interesting. We heard there was a newspaper article, for example, on, I don't know whether it's China Plus One or no, but how two articles, one which said that how Germany is facing problems with regards to its production because of gas supply issues, and therefore glass production could move eastwards. And then we heard Saint-Gobain in yesterday's newspaper talk about how they are targeting 2.5 times the revenue in the next 6 to 7 years, and with a large investment as well. So a bunch of these smaller spaces would have seen production move eastward, whether it's coming out of what was earlier given to China or just being transferred to India or some of the other countries remains to be seen. But I think it's a pocket to watch out for. Anyways, stocks to focus on in the session today. Excuse me for the digress, but stocks to focus on in the session today. ITC, one clear winner today. Revenues up massively compared to estimates, and difference between gross and net out here, but still substantially higher. EBITDA at 6,077 crores versus Bloomberg estimate of 5,302. Net profit at 4,389. Bloomberg estimate of 3,974. So you can see on most counts, it did very well. The highlights, cigarette business likely has reported about 29% volume growth versus estimates of about 20-odd%, which brokerages had. Agribusiness, 82% jump, significantly ahead of estimates. 3x growth in hotels business, even though there was a 100 basis points decline in the EBITDA margin. And the FMCG business reported a sequential drop in EBIT margins for the 4th consecutive quarter. So that remains a bit of a pain point. But I think broadly the numbers are above estimates. And, just look at what brokerages have done. Morgan Stanley, overweight, target price raised to 330. CLSA, outperformed, target price raised to 330. Dollard Capital, upgrade to buy, target 368 from a stock which was shunned at 200 to there being if not a beeline, then at least an appetite for it. ITC certainly come a long way. Could Zomato be the next one in store? I have no idea. But here's, post the numbers that have come out, I thought it's best to get the brokerage view because they sum it up well. Remember, most brokerages are bullish on Zomato, so keep that in mind. But UBS view, buy with the target price of 95. They say that the Q1 FY23 has been a strong quarter, and EBITDA break-even in food delivery, which is a big thing. They believe that growth drivers continue to remain strong and losses continue to reduce quarter on quarter, which is positive, and that the management has guided for no more minority equity investments. So I reckon that investors could take some heart from Zomato's delivery of numbers as well as viewers. Don't forget a key thing: the US 10-year yield coming off leads to some bit of uptick for the multiples which were downgraded for all platform companies, both in the US and thereby consequently in countries like India too. So watch out for the platform companies, the Zomatos, the PV fintechs of the world would be very interesting plays. What I thought was very interesting set of numbers was Kansai Nerolac, and you would accuse that a QOQ may not be a correct depiction, so we brought you both. So first, the quarter-on-quarter depiction, revenues up 33.5% at 2051 versus 1536. EBITDA up 3x at 255 crores versus 83. EBITDA margins at 12.5 versus 5.5. And net profit up 8x at 152 versus 19.17 crores. Frankly, quarter one of the Jan to March of 2022 was probably less impacted than April to June of the last year. And that's maybe, which is why a lot of people argue that quarter on quarter might be a good depiction. But let's bring you the YOY too, where I thought Kansai Nerolac did reasonably okay. Revenues up 46%. EBITDA margin at 12.5%. Yes, down about 100 basis points. But PAT up 33% at 152 crores. And revenues were up. I mean, generally, not just whatever, but revenues this quarter were up due to strong revival in demand in the industrial segment, especially automotive, coupled with price increases in both segments. Remember, automotive is a big chunk for Kansai Nerolac per se. So watch out, this could well be a stock that could do okay. Remember, it's also approved. Let's get the stocks in news plate. They've also approved the monetization of idle land parcels, and therefore Kansai Nerolac kind of remains in focus even from that announcement perspective. So Kansai is one. There is United Spirits, which is going to seek share, which is sought shareholders nod for divestment in select brands, or Zomato, which is planning new management structure with multiple CEOs as per Reuters, or Agarwal Industries, wherein Ashish Kacholia has bought about 3.72 lakh shares. Keep in mind though, viewers, please don't go out and buy a stock because somebody else has bought it. That is part one. Also, Agarwal Industries was up about 8-9% or 10% in trade yesterday. So please be mindful of that. And NMDC, whereas the July production numbers have gone down quite significantly, they may have also brought in those production outages, which steel companies did in the last quarter. Sales were down about 10% YOY to 2.95 million tons. Keep in mind, NMDC has seen some selling, institutional selling in the current couple of days, and might continue. So might be under pressure for this week, this stock. So watch out for that one. Auto sales numbers, Hero MotoCorp, Eicher or TVS, largely in line. In the case of Hero or Eicher, maybe marginally lower. In TVS Motors, maybe marginally higher, but strong show by TVS, which is actually a good sign. Some other results include a Castrol, wherein revenues are up 39% and profit was up 47% with stability in margins. So good show. But Thyrocare, not a great show. Revenues down 22%, EBITDA down 49%, margins coming off quite significantly, net profit down 60%. Could this be the way some of the other companies performed too? Lal PathLabs was out, but I think Thyrocare and Metropolis is left. Could be interesting to see whether the diagnostic companies per se come under a bit of stress. Battery companies would be in focus because they've been up substantially in the last 4 trading sessions. Amara Raja is up about 7.5% in the last 4 days. OI is down 16%. The bout of short covering in Exide. The short covering got over, and there was actually a bit of a long build-up building yesterday, I presume. Was up about 5.5% over the last 4 days, and Exide is actually now trading about its 200-day EMA of about 156. Remember, yesterday's close was about 158, and JP Morgan upgraded the stock to a buy yesterday post results. So do watch out for Exide and Amara Raja. Battery stocks certainly in focus. Last but not the least, Escorts. I didn't talk about the numbers, but I thought I'll get in the brokerage call there. CLSA has downgraded the stock to a sell from a buy. The target price has been cut to 1612 from 2069. They've cut earnings estimates by 24 to 26% over FY 22-24 on 7% lower volume forecast and about 400 basis points cut in EBITDA margin. The losses in market share despite decline in margins. They've lost market share despite decline in margins, and big miss on margin led to a negative surprise. Kubota on earnings, that is, and Kubota Escorts synergies are yet to play out. So Escorts could be under a bit of stress. Let's see if it kind of correlates to Mahindra and Mahindra's tractor division too. Though for M&M, the auto segment is firing on all cylinders, and that should help the stock any which ways. So it did help the stock yesterday, was up about 6%. So quite a strong show yesterday as well. So viewers, that's the long and short of today's trade setup. Be mindful of the fact that the next couple of days could be volatile on account of what's happening in the US-China-Taiwan corridor. So that remains the key monitorable from a global news flow perspective. Thanks so much for tuning in today. Have a safe day ahead.